we're going to have our Michael Saylor one day. I don't know who's going to represent the precious metal sector, but one day we'll have some crazy guy and or Cathy Woods and talking about precious metals like the next best thing. It's going to happen one day, but not now. Maybe in 10 years when we start peaking. Right now, people throw rocks at us when we talk. When I tell them my crazy targets for gold and silver, people they say, Patrick, metals suck. Yes, they do suck, but they will not suck as soon as they break out versus the SPX. In 2001, 2008, when NASDAQ broke down and closed below its 3-year moving average, look, it took 1 to 3 months for gold to bottom and then decide to go the other way around. Right now, like you saw the SPX chart, where they're starting to close and staying close below their 3-year moving averages. So, and you saw how close we are, the gold to SPX ratio, like we're hogging the line. So each of those candles was a monthly close. So do we need 1 more month, 2 more months, 3 more months? I'd say we're a few months away from closing above that important breakout line. We just don't know, but we're within striking range right now. It's not like we're super far away from a breakout line. And Patrick, what are you talking about? It could be years. Now we're super close. So we just have to wait until that breaks out. But yeah, I'd say months for now, but just keep an eye on the chart. I'm just looking at the chart. If the price action goes down and decides not to break out, all these roadmaps, these targets, a chart pattern is only a chart pattern once it completes. Before it completes, it's a possible, let's say it says it's a possible rising channel, possible triangle, whatever these fancy names you got. It's nothing. It's just morphing into existence. We're observing that the price action is respecting a horizontal line, resistance, it's respecting a support line. Until it closes above that line, the market has told us nothing. It's just telling us I'm basing. So all these targets, all times to reach those implied measure moves, all that stuff gets enacted once we close above the line. So yes, I don't know, I'm guessing 3 months before gold breaks out versus SPX, but that's not the measure to judge the forecast. The forecast is once we close above that breakout line, then check it out, go to for a successful bull run. If we don't get a successful bull run after we close above that breakout line, and it does happen, they call that false breakouts, but the odds are lower than having a sustained run. And it's all about using TA there to be on the right side of those probabilities. Yeah, I did some long picture charts. So for gold, for oil, like I wouldn't be surprised to see $300 barrel of oil, maybe 800 later on. But you can't be impressed by those numbers because essentially they're just printing, adding zeros. Oil, a barrel, I don't know, used to be under $1. Then after that was $20. Then after that, it's over $100. So I'm just adding zeros magnitude, but it's not the end of the world, right? They're just printing more money. They're just adding zeros to stuff. What you got to look more is more like a ratio of how oil is expensive to, let's say, gold. And that's when, let's say, the price of something is stretched versus the price of something else. That's when you have stresses in the system. If oil price goes up too fast, too high versus, let's say, the gold price, then you could say, oh, something's going to break. There's a lack of liquidity in the markets, or it's sucking out too much money via inflation, and then it breaks down. The price of oil goes down. And then until it gets uber low, like in the March Madness of 2020, the ratios were telling you, man, it was screaming oil was cheap, not just a nominal price, but versus all the other asset classes. Historically, it was a great time. So oil has a bright future. Of course, a human's going to think a straight line. And then oil goes to, let's say, 100, it goes down to 60. Oh, Patrick, you told me 300. Well, there's support and resistance lines all over the place. Price action goes up, it tests a new plateau, fine, there's resistance. Price action goes back down to test the previous plateau. Oh, it holds. Oh, that's support. I guess this is a new plateau. And then price action goes up. So over like 10 years, yeah, $300 oil, no problem. I don't know about the fundamentals. Again, all the same stories we could have today, if I would have placed them at a different moment in these cycles of capital flows, the price action could have been subdued or accentuated, because I'm pretty sure in 2011, 12, people were talking about $5,000 gold, and it just wasn't meant to be because it was already starting to break down versus US equities. The ratios were stretched in favor of precious metals or oil versus US equities. It was just the pendulum swing. The move was done, guys. So no matter if people say, oh, Greece default in 2011, gold has to go up, it's the end of the world. I actually don't like hearing about bullish fundamentals for oil. I don't like hearing that there's going to be less, or there's a production cliff or whatever you want to call it. I don't like hearing that stuff. I want the price action to go up when there's only bearish news. Let's keep the bullish news for the blow off top at the end. Well, uranium is super powerful because it broke out. Uranium, the metal, the Sprott uranium physical trust broke out versus SPX, broke out versus the NASDAQ. It's front leading gold on many aspects. The charts, they look great with huge bases. A lot of the miners, they broke out. Now they're consolidating above rising 3-year moving averages. I don't know if the consolidation is done yet, but they seem recently, I've looked, they started waking up from their pull flags. So it's a pattern where you explode out of the base, and then you consolidate sideways above support. They're trying to try to do another leg up. That would be awesome if it would coincide with gold actually breaking out, the timing of gold breaking out versus SPX. Like you said, that institutional investment will start coming into the uranium even more in a more substantial way once gold breaks out versus SPX. Uranium, it's candy what it did right now. Like it's gonna go ballistic. The chart of Cameco from 2001 and even the uranium chart from 2001 to 2007, I don't know, when like 50 months in a row it went up, or quarters. Like it was totally bonanza once the money of the flow started coming in. And I'll mention this: uranium and oil at the beginning of a bull market in commodities, they're the fastest runners. So in 2007, uranium and oil peaked first. Then they crashed in the 2008 crisis. And when they tried to rally again, they did marginal new highs, or they weren't able to really go in 2011, go much above their 2007, while gold and silver, they're more the closers. You know, gold opens the spigots, and then it lets all the friends run loose crazy. And gold and silver love closing up the show at the end of the precious metals bull era. But let's say you're a uranium aficionado and oh, I love uranium fundamentals, but you're right. Until CNBC talks about it, is it really contrarian news to play? You know, it's like until there's a Michael Saylor saying he has the green uranium eyes instead of the laser eyes, then we're good, guys. Sugar's been one of my favorites. It's super inflation sensitive. It looks super strong cycle. So it broke out of the base. Now it's consolidating above moving averages. That thing's gonna look good. And yeah, the ones that didn't go parabolic yet, they all go. If I did a chart one time, I put all commodities on one chart from 1970s, and they all have their cycles where they love to spike. Your trick is to find one that hasn't spiked yet, which nobody's talking about. Sugar's one of them. Coffee spiked a while back. Now it's like they say it's crashing while it's going back down. So you want to avoid that, because whenever you have a parabolic melt up and down, you need a magnitude of time to wipe out all these. That's why people, like when they see a crash 70% in Bitcoin, they think it's going to V-shape recovery like that. No, it takes a magnitude of time, because all those guys that bought at 50, 60, 50, 40, 30,000, as soon as the price goes up to that level, they're going to want to cash out, break even. So now they could tell their wife they didn't lose any money, right?